But we've told you since the trade war started how big of a partner Canada is for the U.S., including the auto industry. Here to dive into the impact this move could have, former auto supply chain executive and Automotive Leaders Podcast host Jan Griffiths. And Jan, always good to see you. Thanks for joining us here tonight on The Pulse. All right, so we took a deep dive into history to kind of bring us back to today. To know where you're headed, you have to know where you've been. Canada, right now, this fight, regardless of the ad, where do you see this fight going? And is this stalemate something that you think these two countries can move past?
Yes, we have to move past it. Look, we are biggest trading partners. Together, we are one. Canada, the U.S., and Mexico. Whether you like it or not, we are one, particularly when it comes to the automotive industry. And what I've noticed with President Trump's actions, whether you agree or disagree with the way he negotiates, he sees something like this, a video, as an opportunity to exert pressure on the other side. And that's what we see happening right now. But we have got to get the talks moving again, and we have to come to a resolution.
I know you're not a political analyst, but you look at tools in the tool chest, tariffs being one of them. In the political tool chest, using ads and leveraging, saying, I didn't like the way you did that. This is a way to kind of draw a stalemate between two countries and exert power.
Yes, absolutely.
What happens moving forward, though, in terms of our trade, specifically the autos? I know that there are some stipulations and provisions in place that are allowing more auto traffic. Is that true in terms of trade between the big three in Canada?
Yeah, well, we saw the earnings come out today with General Motors and with Ford, and the tariff impact was not as great as they had originally anticipated. Still big numbers, $700 million for Ford and $1.1 billion for GM.
Well, it was expected to be far greater than that.
It was expected to be greater than that. So that tells us that the auto industry, we're managing it. We're doing things to manage it. But the auto companies, GM and Ford specifically, are very happy with the administration, with the extension of this tax credit, which gives them an advantage of 3.75%. It's a complicated
and you're always good at explaining it.
No,
you are. But
tough one.
I do want to bring, because you talked about the big three being complimentary of some of the administration and what this administration is doing. Let's show you what President Trump said. He said, Mary Barra of General Motors and Bill Ford of Ford Motor Company just called to thank me for putting tariffs on mid-size and large-size trucks. Their stock has gone through the roof. They told me that without tariffs, it would be a very hard, long slog for truck and car manufacturers in the United States. What do you make of this?
I'm not sure that I would agree with gone through the roof, but as I said, they are certainly very happy with the fact that the administration extended this tariff tax credit out to 2030, and they are starting to see some benefits, and they are flowing back into their financials.
Is it possible for executives and analysts across the board to try for a moment to take politics out of this and actually say that this administration may be making headway in helping even out the trade balance and benefit the U.S.? Do you think that that's something that could be happening?
I think it is. I think there's a possibility that discussion will take place. But it's very emotional right now. As you know, and politics are in the mix. But if you look at how the market reacted today, it was kind of numb to the whole thing. The whole reaction to Canada trade talks being shut down, and there was no market reaction. So I think we're getting numb to it. But okay, so now we're starting to understand how this thing is being played out, how trade negotiations are happening. But we've got some critical dates in front of us. November 1st is the date that the 25% tariff rate goes on medium heavy trucks.
Got it.
And that's going to be big. Not so much for the US manufacturers, but if, for example, if you're a Japanese car manufacturer, maybe you're saying, well, wait a minute, didn't we just have an agreement of 15%?
So when people say that feels chaotic, and they say that other world leaders say, I don't know what to expect, what will the U.S. do next? It's keeping the world on its toes, but at the same time, that in some ways may be good, and in some ways may destabilize things.
Yes, absolutely. I think, yes, it is. It can be good. It's like, oh, okay, what's going to happen? I got to be ready for anything. And the one thing we're good at in the auto industry, we're good. We are resilient. We are tough. We can handle anything. But it also causes chaos and uncertainty. It's starting to calm down. China talks are coming up. They're going to be resolved, hopefully, at the end of the month when President Trump meets with President Xi.
Sure.
So once that's done, then I believe things will calm down. We've got the Supreme Court decision. Well, it's not a decision, but starting to hear arguments on November 5th. And then the 90-day pause with China ends on November 10th. So once we get past that, then I believe we can settle down, we can plan our businesses.
We have so much more to talk about, but we just started scratching the surface, but you always do a great job doing that. Jan Griffiths, thanks for joining us here. Where can people find your podcast?
The Automotive Leaders Podcast is on your favorite podcast app.
Very good. You do great work, and we'll continue to tap into your expertise right here on The Pulse. Thanks for your time, Jan.
Thank you.